Hello everyone, John AG here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, real market updates that everyone cannot tell you. So please subscribe this channel and love you all of my subscribers for your support. And please watch this video till the very end because YouTube will not push my videos to more people. And powerful today is Wednesday, May 20th, 2026. Please take a moment to mark this exact date on your calendars. Write it down in your journals and burn it into your memory, because what we are collectively witnessing today is not just another standard market fluctuation. It is not a routine correction that will magically bounce back by next quarter. It is the definitive beginning of an era-defining shift, a violent, seismic rupture in the very foundation of the global financial system that will be written about in history books for centuries to come. Over the last 48 hours, the Federal Reserve has stepped up to the podium and delivered a warning that has sent absolute, unadulterated shockwaves through the marbled corridors of power on Wall Street, through the banking capitals of Europe, and across the trading floors of Asia. They are quietly, but with terrifying urgency, preparing for a sudden, catastrophic, and completely unprecedented $5 trillion economic collapse. Listen closely to that number, $5 trillion. That is not a typographical error on a teleprompter, and it is not hyperbole designed to scare you. That is the exact scale of the wealth destruction currently hanging by a thread, suspended like a sword of Damocles over the global markets. But why is this happening right now? Why, after months of politicians and central bankers looking straight into the camera and promising us that the economy was resilient, that inflation was completely under control, and that we were gliding smoothly toward a painless, soft landing, is the narrative suddenly fracturing into a million pieces? If you want the real answer to that question, you have to stay with me, because what I am about to reveal in the next few minutes completely dismantles the lies you are being fed on evening television. To understand the sheer, terrifying gravity of this moment, we must step away from the polished television screens and the carefully crafted press releases of corporate media. We need to look at the raw, unfiltered, and highly sensitive data. We must examine the deep, hidden currents of global liquidity, the cutthroat geopolitics of energy, and the incredibly fragile psychology of the human beings who actually make up this global economy. The mainstream financial media operates on a very simple, highly profitable premise: keep you calm, keep you heavily invested in their sponsors' products, and keep you entirely in the dark until it is too late for you to exit the burning building. They sell you blind optimism because optimism generates fees for them. But here at Aurex, we deal exclusively in reality. And the undeniable reality of May 2026 is that the global economy is a towering house of cards, built in a hurricane zone, resting on a foundation of quicksand, and the winds of a Category 5 financial storm have just started to howl. Let us meticulously dissect exactly what the Federal Reserve is signaling to the institutional elites today, behind closed doors. For over a decade and a half, the market operated under one core, supposedly unbreakable assumption: the Fed put. The unwavering belief was that whenever things got truly dangerous, whenever the stock market started to crack and wealth was threatened, the Federal Reserve would rush in like an all-powerful financial paramedic. They would slash interest rates down to absolute zero and pump trillions upon trillions of freshly printed digital dollars of quantitative easing directly into the system. This conditioned an entire generation of investors, from billionaire hedge fund managers to everyday retail traders, to blindly buy the dip, regardless of how disconnected the stock prices became from the underlying economic reality. They were taught that risk had been permanently eradicated by the printing press. But the game has fundamentally changed. The rules have been violently rewritten by the cold, unforgiving, and invisible hand of sticky, structural inflation. Right now, at this very second, the Federal Reserve is caught in the most terrifying catch-22 in the entire history of modern central banking. On one side of the ledger, they have a physical economy that is visibly, painfully suffocating. Small and medium-sized businesses, the absolute lifeblood and backbone of the labor market, are drowning under the crushing weight of exorbitant borrowing costs. Consumer credit card debt has soared past astronomical, mathematically unpayable levels. Ordinary families are using high-interest credit just to buy groceries and put fuel in their cars. Delinquencies on auto loans, commercial real estate, and residential mortgages are quietly creeping up, silently destroying the balance sheets of regional banks across the country. But hold on to your seats, because if you think the consumer debt crisis is the biggest threat, you are entirely missing the invisible monster lurking on the other side of the Fed's ledger. On the other side of this impossible equation, they face an inflation beast that simply refuses to die. The geopolitical conflicts that have erupted throughout 2026, particularly the devastating, paralyzing energy shocks triggered by the military closure of the Strait of Hormuz, have caused crude oil and liquefied natural gas prices to surge to levels that break industrial economies. Energy is the master resource. It is the singular, fundamental input for absolutely everything we do as a civilization. When the price of oil skyrockets, the price of transporting food across the country skyrockets. The price of manufacturing basic goods skyrockets. The cost of raw materials surges. Inflation, which the Federal Reserve arrogantly claimed was completely defeated just a year ago, is roaring back to life with a vengeance that is destroying the purchasing power of the middle class. And so, the Federal Reserve's sudden warning today is essentially a white flag. It is a surrender. They are broadcasting a coded message to institutional investors, the powerful entities who oversee the $5 trillion currently resting on a razor's edge, that the central bank can no longer ride to the rescue. If they aggressively cut interest rates to save the collapsing stock market and bail out commercial real estate, they risk instantly igniting a hyperinflationary spiral. That spiral will absolutely decimate the purchasing power of the US dollar, causing the price of basic necessities to double or triple, crushing the working and middle classes under the sheer cost of basic daily survival. However, if they hold interest rates at these elevated levels, or raise them even further to fight this new wave of supply shock inflation, they virtually guarantee a massive, deflationary 1929-style collapse of global asset prices. The entire stock market, the drastically overvalued real estate sector, and the highly leveraged corporate bond market will face a catastrophic liquidity freeze. They are entirely trapped. And when the ultimate lender of last resort is trapped in a corner with no viable weapons left, the $5 trillion bubble of speculative, debt-fueled capital has absolutely nowhere to hide. What does a sudden $5 trillion collapse actually look like in the real world? It sounds like an abstract macroeconomic number, a figure so incomprehensibly large that the human brain fundamentally struggles to visualize it. But I need you to understand exactly how this machinery works, because it is very real, it is entirely structural, and it is going to affect the balance of your bank account. Over the past 3 years, driven by the explosive, irrational, and entirely unchecked euphoria surrounding artificial intelligence, we have witnessed the creation of what financial insiders call a violently K-shaped economy. The top line of the K represents the massive tech conglomerates, the semiconductor monopolies, and the AI pioneers. These specific companies have magnetically sucked up trillions of dollars in global market capitalization. We have seen initial public offerings slapped with valuations that rival the entire gross domestic product of advanced, developed nations. But do not let the hype blind you to the math. The entire global equity market has become dangerously, recklessly reliant on the flawless performance of just a handful of mega-cap technology companies. The $5 trillion currently at risk is the speculative premium, the pure, unadulterated hot air that has been aggressively blown into these sectors by institutional investors who are making leveraged bets on a perpetual, never-ending growth machine. Here is the fatal structural flaw that no one on Wall Street wants to admit. This projected AI growth requires immense, unprecedented, and physically impossible amounts of capital expenditure. It requires dirt-cheap energy to power massive, sprawling data centers. It requires flawless, uninterrupted global supply chains to source rare earth minerals and manufacture advanced microchips. And as of today, May 19th, 2026, both of those fundamental requirements are actively, visibly breaking down in real time. When you have $5 trillion of highly leveraged derivative bets teetering on the edge of a cliff, the unwinding process is never slow, polite, or orderly. It happens in the blink of an eye. It starts the exact moment the market drops just enough to trigger a wave of automatic margin calls. Hedge funds, family offices, and institutional proprietary traders who recklessly borrowed billions of dollars to mathematically amplify their tech bets are suddenly forced by their prime brokers to sell assets immediately to cover their massive debts. Because they desperately need cash liquidity this second, they do not just politely sell their failing tech assets. They sell absolutely everything they can get their hands on. They liquidate their gold holdings. They dump their reliable blue-chip dividend stocks. They heavily sell off real estate investment trusts and government bonds. This relentless selling pressure spreads like a highly contagious, unstoppable financial virus across the entire global ecosystem. As the sheer volume of panic sell orders hits the order books, the buyers completely step back. Market makers, terrified of catching a falling knife, aggressively widen their bid-ask spreads and entirely pull their liquidity from the system. Suddenly, the market experiences a devastating liquidity vacuum. Prices do not just slide, they gap down violently, jumping over stop-loss orders. A major company stock that was comfortably trading at $150 at breakfast might not find a single willing buyer until it plummets to $90 by lunchtime. This is the exact terrifying mechanical process of the sudden collapse the Federal Reserve is bracing for right now. It is a brutal avalanche of rapid deleveraging, where $5 trillion of perceived on-paper wealth simply vanishes into the ether, leaving behind nothing but a tragic trail of decimated 401k retirement accounts, totally bankrupt pension funds, and completely wiped out retail investors. If you are finding this information critical, make sure you keep watching, because understanding the collapse is only half the battle. The geopolitical catalyst behind this is something the media is actively downplaying, and it dictates exactly where you need to move your money next. We cannot possibly discuss this dire economic warning without deeply analyzing the geopolitical spark that has definitively lit the fuse. Economics simply does not exist in a sterile laboratory vacuum. It is deeply, inextricably intertwined with the brutal, unforgiving reality of human conflict, finite natural resources, and the relentless global struggle for hegemonic power. The year 2026 has brought humanity face to face with the supreme fragility of our hyper-globalized world. The escalating conflict in the Middle East has spiraled far beyond a localized regional dispute. It has morphed into the absolute greatest global energy security crisis in the history of the industrialized world. The strategic blockades, the disrupted maritime shipping lanes, and the highly targeted precision destruction of critical energy infrastructure have effectively choked off a massive, irreplaceable percentage of the world's seaborne crude oil and vital liquefied natural gas supplies. When a vital global choke point like the Strait of Hormuz is compromised, the global economy bleeds profusely. Think about the profound, catastrophic ripple effects spreading outward. Europe, which was already deeply struggling with severe industrial strain and a highly painful, poorly executed transition away from cheap foreign energy, is now facing the very real, terrifying prospect of rapid, involuntary deindustrialization. You cannot magically run heavy manufacturing facilities, chemical plants, or automotive assembly lines when electricity and raw feedstock costs surge by 30 to 40% overnight. Massive production lines shut down. Vital supply chains snap. Tens of thousands of highly skilled blue-collar workers are indefinitely laid off. This immense, escalating geopolitical instability is exactly why the Federal Reserve is privately panicking behind closed doors. Central banks have the supreme power to print infinite amounts of fiat currency, but they cannot print a single barrel of physical oil. They cannot print massive cargo ships to transport goods. They cannot print complex semiconductor supply chains, and they certainly cannot print geopolitical peace. The virulent inflation we are facing right now is a structural supply-side shock, meaning it is entirely immune to the traditional blunt tools of monetary policy. When a central bank attempts to solve a massive physical supply shortage by intentionally destroying consumer demand, which is exactly what holding interest rates high does, they inevitably break the underlying economy. The $5 trillion economic collapse we are staring down the barrel of today is the tragic, unavoidable cost of a world that is rapidly fragmenting, aggressively deglobalizing, and terrifyingly rearming itself for conflict. Now, I want to deliberately step back from the complex macroeconomic charts, the sprawling data sets, and the intricate geopolitical maneuvering. I want to talk directly to you about what this means for your life, for your family, and for the hardworking people in your local community. Because here at Aurex, we refuse to ever lose sight of the profound human element. Behind every single moving average, behind every plunging ticker symbol, there is a very real, breathing human story. Behind every massive market crash is a dedicated family's completely shattered dream. When the titans of Wall Street lose $5 trillion, the elite executives will be perfectly fine. They have secured multi-million-dollar golden parachutes, deeply hidden offshore bank accounts, and vast portfolios of untouchable hard assets. The true, heart-wrenching tragedy of a sudden economic collapse always falls squarely, heavily, and exclusively on the tired shoulders of Main Street. It falls ruthlessly on the 65-year-old grandfather who has worked tirelessly for 40 consecutive years, sacrificing his time and body, saving diligently in a target date retirement fund, only to helplessly watch 40% of his life savings evaporate in a matter of weeks, just months before he finally planned to stop working and spend time with his grandchildren. It falls mercilessly on the optimistic young couple who finally managed to scrape together a modest down payment for their very first home, only to see banking lending standards tighten so dramatically and violently that their mortgage application is abruptly denied. Or even worse, they manage to buy at the absolute top of the market and are immediately plunged into suffocating, inescapable negative equity as housing prices gap down. It falls devastatingly on the passionate small business owner, the true beating heart of the local economy, who suddenly wakes up to find their crucial lines of credit completely frozen, their panicked suppliers desperately demanding cash up front, and their previously loyal customers vanishing completely as discretionary consumer spending evaporates overnight. This is the deeply human, emotionally devastating, and profoundly visceral side of finance that the mainstream corporate sponsored media rarely discusses with the solemn respect and empathy it rightfully deserves. When the economy contracts violently, it doesn't just destroy capital, it creates a profound, widespread crisis of hope. We are witnessing the real time, systemic breakdown of the fundamental societal contract. The implicit promise of the Western world was always very simple: work hard, play by the established rules, save your money responsibly, and you will be safe and secure. But how on earth can you possibly feel secure when the very currency you are saving is being systematically, intentionally debased by the government, and the financial assets you are told you must invest in are an artificial, debt-fueled speculative bubble just waiting for a pin? The deep, sinking anxiety you feel in your chest when you walk into the grocery store and stare in disbelief at the price of a simple loaf of bread, a carton of eggs, or a gallon of milk is incredibly real. You are not going crazy, and you are not imagining it. You are viscerally feeling the silent, insidious theft of inflation, the direct, unavoidable mathematical result of years of reckless, irresponsible monetary policy finally coming home to roost. The Federal Reserve's hushed warning today is a terrifying admission that the financial pain is going to brutally transition from the grocery store aisle directly into the labor market. The transition from high inflation into deep stagflation, a paralyzing, miserable period characterized by stagnant economic growth, high unemployment, and relentlessly high consumer prices, is undoubtedly the most brutal, soul-crushing economic environment a society can ever endure. But do not look away now, because what comes next is exactly how the wealthy survive this transition, and the psychology behind it is the single most important thing you will learn today. To not just survive, but potentially thrive during what is coming, we must deeply understand the raw, unfiltered psychology of a market crash. The financial market is not a cold, rational, perfectly efficient calculating machine. It is a manic depressive, highly emotional entity driven exclusively by two primal, overpowering human emotions: unchecked greed and absolute paralyzing fear. For the last 10 years, we have lived in an unprecedented historical era of rampant, intoxicating greed. The fear of missing out has driven highly intelligent, rational people to blindly invest their hard-earned life savings into digital assets, unprofitable tech companies, and complex derivatives they fundamentally do not understand. We have witnessed the total financialization of everyday life, where ordinary people treat the stock market exactly like a Las Vegas casino, genuinely believing that the house, the Federal Reserve, will always step in to ensure they never lose. But when the underlying macroeconomic paradigm shifts, the psychological transition from greed to fear is completely violent, chaotic, and instantaneous. It is an emotional whiplash that breaks people. Right now, in May 2026, the general public is still firmly trapped in the denial phase. You will continue to hear highly paid pundits on television confidently telling you that the economic fundamentals remain incredibly strong, that the American consumer is historically resilient, and that this current volatility is just a healthy, necessary pullback. They are absolutely desperate to maintain the fragile illusion of stability so you don't pull your money out of their funds. But as the days slowly turn into agonizing weeks, and the weeks stretch into terrifying months, that thin veil of denial will violently give way to sheer, unadulterated panic. When retail investors open their brokerage applications on their phones and see deep red day after day, week after brutal week, the psychological pain simply becomes completely unbearable. They hit the sell button not because they strategically want to, but because they emotionally have to, simply to stop the unrelenting psychological bleeding. This exact moment is the phase of capitulation. It is the darkest, most terrifying, and deeply pessimistic moment of any historical economic cycle. But, and I need you to listen to me as if your financial life depends on it, because it just might, this exact moment of peak terror is also the moment of absolute greatest opportunity for those who are prepared, calm, and highly liquid. Real generational wealth is never truly destroyed in a market crash. It is simply aggressively transferred. It is transferred rapidly from the impatient to the fiercely patient, from the recklessly overleveraged to the highly capitalized, and from the blissfully ignorant to the deeply informed. Your absolute paramount goal as a dedicated viewer of this channel is to ensure with complete certainty that you and your family are firmly standing on the right side of that historic wealth transfer. So, the critical question remains, what exactly do we do right now? We categorically do not panic. Panic is the ultimate enemy of wealth preservation. We observe the data, we analyze the geopolitical chessboard, and we execute a highly disciplined strategy. Here is the real, actionable information, the unvarnished truth on how to tactically position yourself for the harsh realities of the May 2026 economic landscape. First, you must absolutely respect the profound reality of cash and liquidity. In a massive deflationary credit collapse, cash liquidity is the undisputed king. While it is true that inflation slowly eats away at the purchasing power of cash over a long time horizon, in the short, violent term of a market panic, having significant dry powder is your absolute greatest, most potent financial weapon. When absolutely everything in the market goes on a massive fire sale, when high-quality, cash-flowing dividend stocks, prime commercial and residential real estate, and tangible hard assets are forcibly liquidated by over-leveraged hedge funds facing margin calls, you want to be the one standing there with capital ready to deploy. Do not let the psychological trap of FOMO trick you into aggressively trying to catch falling knives. You must have the supreme discipline to wait for the dust to completely settle. Second, you must immediately pivot your focus toward tangible, indispensable hard assets. The grand digital illusion of wealth is violently cracking before our eyes. In a fractured world increasingly defined by severe physical energy shortages, escalating geopolitical military conflict, and relentless currency debasement by desperate central banks, global capital will inevitably, rapidly flow toward things that are physically real and absolutely necessary for human survival. Precious metals like physical gold and silver have flawlessly served as the ultimate, supreme store of human value for over 5,000 years. They exist completely outside the fragile digital banking system. They carry absolutely zero counterparty risk, and they historically perform their absolute best when public faith in central banking institutions entirely evaporates. Furthermore, the global economy simply cannot function without baseload energy and industrial commodities. The world needs oil, natural gas, uranium for nuclear power, and massive amounts of copper for the electrical grid. The structural, physical supply deficits in these massive markets are profound and undeniable. Companies that possess the infrastructure to pull these critical, life-sustaining resources out of the ground will command a massive, unprecedented premium in the turbulent years ahead. Additionally, you cannot ignore the absolute necessity of agriculture. Food security is rapidly becoming the ultimate national security. As global interconnected supply chains fracture and break, highly productive agricultural land and the vital inputs required to grow human calories become literally invaluable. Third, you must ruthlessly deleverage your personal life. If the Federal Reserve is fundamentally trapped into keeping interest rates significantly higher for much longer than anyone anticipated, carrying debt will be your heaviest, most dangerous anchor. If you currently hold variable rate debt, high-interest credit card debt, or heavily overextended personal loans, you are standing in the absolute red zone of danger. You must make it your absolute highest priority to aggressively pay down toxic consumer debt immediately. You must build an impenetrable fortress around your personal household balance sheet. If you unfortunately lose your primary source of income in a deep, prolonged recession, the absolute last thing you need is a massive, compounding debt burden working against you while you are down. Fourth, you must aggressively and intentionally enhance your own personal intrinsic value. In a bifurcated K-shaped economy, where the rapid advancement of artificial intelligence and robotics are systematically hollowing out white-collar jobs and the traditional middle class, your absolute greatest, most reliable hedge against economic collapse is your own unique skill set. You must strive to become completely indispensable to your employer, your clients, or your local community. You must intensely focus on developing complex skills that cannot be easily replicated by an algorithm or a software program. Deep leadership, complex human problem solving, highly skilled manual trades, and profound empathetic interpersonal communication. You must invest heavily in your physical and mental health, the strength of your local community network, and your own personal psychological resilience. My friends, we are consciously living through a profoundly historic, unprecedented moment in time. The Federal Reserve's dire warning today is the deafening crack of thunder right before the torrential, unrelenting downpour begins. The $5 trillion economic collapse they are desperately bracing for is no longer a question of if, It is strictly a matter of when. The massive underlying structural fractures in our geopolitical security system, our incredibly fragile global energy markets, and our deeply flawed debt based monetary policy are simply too vast, too deep, and too severe to be papered over with more printed money anymore. Do not let this reality drag you into the depths of despair. Massive financial crisis and incredible generational opportunity are essentially two sides of the exact same coin. The people who are completely destroyed by these massive historical events are the ones who stubbornly refuse to open their eyes and see them coming. By choosing to watch this video, by actively seeking out the unvarnished truth, by diligently preparing your mind, your household, and your personal finances, you are already miles ahead of the sleeping herd. The old, familiar world is rapidly passing away, and a completely new, vastly different financial paradigm is being violently born in its ashes. It will undoubtedly be turbulent, it will be deeply frightening for many, but for those who possess the courage to see reality for what it is and prepare accordingly, it will represent the single greatest wealth building opportunity of an entire lifetime. Thank you so much for taking the time to watch and listen today. Please remember that the mainstream corporate sponsored media will never ever give you the full, unedited picture of what is happening behind the scenes. If you found genuine value in this deep, unfiltered dive into the truth, if this information opened your eyes to the harsh, undeniable reality of the global financial markets today, please take a second to hit that subscribe button. Leave a detailed comment down below with your thoughts. How are you personally preparing for this massive macro shift? What actionable steps are you taking today to protect your family's future? I read every single comment you leave. Please like this video, share it immediately with someone in your life who desperately needs to hear the truth before it is too late, and remember to stay constantly vigilant, stay deeply informed, and always, always stay firmly grounded in reality. I love you all for your incredible, unwavering support. I will see you all in the very next market update. Stay safe out there.